Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 2nd of March, 2020, just getting on to 4:40 in the afternoon. That's p.m. Central Time. No, the camera's working. I mean, whoa. Nearly a 5.1% gain in the Dow, the largest one-day percentage gain ever. Other indices not far behind it. In the morning at 7 a.m., I think it's Eastern time, U.S. Treasury Secretary Mnuchin and Fed Chair Powell will be hosting with the G7 conference. Now, it's not person to person. I think it's going to be over the phones or video conference. And after that, we're going to get a communique. We're already hearing from the Vice President of the ECB that the bank stands ready to do anything. The problem is, are they going to cut deeper? Or are we going to see governments do some fiscal stimulus via central banks or not with central banks? We don't know. We know that there's stimulus. We know that they want to put out a message that the major governments of the bigger countries, the economic countries, the giants of the world, stand ready to do something. Okay. The problem is, and I want to say this before it even gets done, this is not a big monetary problem yet. This is a virus problem that is causing a monetary problem. So my guess is they're going to do a stimulus of some type. Don't quite know what it is. I hope nobody shoots all their bullets because we don't know when the virus ends and you may have to do something else. So as much as the market went up and it held key spots, and if you look at my Spider ETF video, you're going to see a number of the markets either held the 200-day average or they're in the process of having gone through it last week, that key average, coming back up to it. I'm not talking the energies. They are in their own world. But I am certainly talking a number of the different sector stocks, and that's what we saw. Is this a buying opportunity is what people have to ask themselves. And my words on this is this. If you're a stock market investor, yeah, you're trying to buy 10%, 15%, 20% declines in pieces. You're never going to pick the bottom. You're looking for your good stocks is my guess. That's my theory. Doesn't mean you have to follow me. Futures are a whole different creature. The volatility's over the top. You're not going to be able to step in front of the algos. I've heard stories that there was so much trading the other day, Friday, that the algos couldn't get their orders filled. I get it. They're all one-sided. You write these programs, they're all trying to buy, and who's selling to them becomes the issue. I get it. That doesn't mean the market's not functioning. It's functioning, and it's functioning fine. You get into panic stages, and I've been through them. I've been a registered broker since 1969. You think I haven't seen these things before? I have. But as a futures trader, you got to know when to step back and say, I don't need to try to catch every play. It's going to kill me in the process. You're at that. Let this G7 communique get out of the way. Then we'll get an idea, is our Fed going to cut interest rates now? Or are they going to wait for the mid-March meeting? What are they going to do? But trying to guess it, and then is today a day where you discounted what their actions are? You got to think these things through. When we take a look at what's going on, you can't get away from the fact that you had a vertical price decline of 10% plus, right? Take a look at this. This market got to 28.53 on a closing basis from 33.81. I mean, that's unbelievable in its size, and you're getting a bounce. You can get a 50% bounce at any time. Does that mean you're changing anything? That becomes the issue. If the COVID-19 virus weren't here, we could make other decisions. We just don't know what this is going to do. And a point for everybody. All these test kits in the U.S. at least are starting to go out this week. They're going to find more, not less, of the people that have it. The news in terms of the virus is probably going to get worse initially rather than better. In looking at the drop, look at the size of the drop and now the comeback. Now, what you could do is take your computer, your program for charting, mark off that high to that low, and see where your Fibonacci points come in. That's something to look at. When you see how the swing line is going, this is not a trend. This is what I call that vertical decline. Now you're getting a bounce. Where's that 18-day average of closes come in? it's not at the halfway point. I can see that. So visually, the 200-day, we got through it, and I think you'd agree, the market hadn't hit it here on Wednesday. Thursday, it got under it. Friday, you extended a little bit, not very much, and you came back with a roar today. So you've spent 2 days under it. You have layers of resistance at 31.69 to 32.64, and I would do a count from 33.97 to 28.53, divide it in half. That's your halfway point in the market. In terms of Bollinger Bands, you had gotten under the bands. You can see that, and we were talking about this. This day, you finished the day at 33.26. You were just over the band of 33.20. Day 1 under it, 2 under it, 3 under it, 4, and you get your bounce today. Okay. That's very typical. 5 you can stretch to. Bonds and notes did even more, which is highly unusual. I think they're up to 7. But my point is, I don't see how markets make a bottom on this and they're suddenly bullish. You could. I don't see it as a chartist. When I look at momentum, you had gotten oversold. You're trying to correct that. So I'm looking at a resistance where the market's gotten back to the 200-day average. I've shown it for you here. The 100 is next to the 18-day average. Are we trending? We are not. We have a pattern of a higher high and a lower low. We then go to the NASDAQ. Remember what I said? Some indices paid very good attention this time, and it was the NASDAQ. Got to that number on Friday, stayed right there. Today you're back over. Okay. Resistance back up at the 18-day average. Trending? No. You came straight down. If we look at it from right back there, look at this. This made a high that day of 97.63, came down to the 200-day, got to 81.26, and now you're getting your first bounce in the market. It's a bounce. I'm not seeing a trend change. The Dow had been in a downtrend. Look at lower highs, lower lows. Your first challenge of the 200-day average, you stopped, but it didn't support the market. Now, when that occurs on the way back up, typically you get resistance at that number. I'm looking to see if we get that there. But this is so far a bounce in a market that got oversold, throw the name off the chart, that went into a vertical price decline. The Russell back over the lower Bollinger Band, oversold, downtrend, 3 layers of resistance, 200-day, 100, 18 days. So I think you're going to see money that was trying to get out last week on this break, on this rally up here. Don't be surprised if you get some resistance. In the VIX, the market got up to just about that 50 level, pulling back very quickly. Go back, it was last year, and look at the 50 level. The same thing happened at that particular point. Interesting, but it doesn't mean that the trend has changed. In the bonds, what did I say? This is unusual. 1, 2, 3, 4, 5, 6, 7. That's the most I've seen in recent times. Consecutive closes over a Bollinger Band top. It's still embedded. It's still bullish. It's a sign of how strong the market is, not that the market's ahead of itself. The same thing in the 10-year notes. When I've seen these events, when you have these embedded readings, not something I want to stand in front of. Is there a reason to be bearish? None. The embedded reading means you're not overbought in these markets. Dollar index. You came all the way down, you're slicing through everything. You've just returned from near the 100 level and straight on down in this market. Okay? The market is anticipating that the Fed's going to cut interest rates by 0.5 basis point as soon as tomorrow and as likely as the 17th of March when the next FOMC meeting happens. We'll see. Do you want to sell under a Bollinger Band? I can tell you what I teach. And that is you're never selling under a band. And yeah, as much as the bonds and notes went, no, I don't teach to buy over Bollinger Bands. That is not what I teach, and there's reasons. Go back and do your work. For the one time it works like that, how many times you get hurt? The euro is the opposite of the dollar, a runaway to the upside. Suddenly this currency looks good, sure. Japanese yen, halting at the upper Bollinger Band, got over it once, and now you're pulling back and fighting your battle. It's 2 days in a row over it. You're overbought. The market is up at a big resistance point, which is often the combination of the 100-day average and the upper Bollinger Band. Bitcoin looks to me like it's finding its support right where we had talked about last week. The combination, again, of that 100-day average in green, the Bollinger Band, and you've had a trend down, a reversal in the market that is grabbing hold, and it's holding where it should, the lower Bollinger Band and that number. We'll see if it can do anything from there, but it's done what, as a market technician, I was looking for. It's not turned its trend up, by the way. In May, Brent versus May WTI. You've been here, done that. You're back to the $5 differential in the two. You had a big reversal. You made the lowest low on this break, and you managed to close higher with an outside day up in the Brent. The market is hoping, I want to use that word hoping, and it doesn't mean they're wrong, that this vertical decline that just went from roughly the 59.5, 59.34 to 48.93, that's almost what, $11, can get a bounce in it, and maybe it can, but the halfway projection should be resistance around 55.16. Again, in the April, and this is April, not May, because it still is where the volume is in WTI, but I wanted to show the difference in the spread. I'd look for resistance towards that 18-day average of closes. Gasoline looks to me like it's trying to bottom here. I wrote in my morning report, and that's something that we do a lot of. We do a lot of writing here at the Linn Associates. I wrote in my research for my subscribers today, I said, do you honestly think the G7, I did this at 11:30 in the morning, is going to have a meeting tomorrow and in any way say anything that isn't bullish for the market? Read my report. That's what I wrote. I'm giving you the gist of it. I believed it. I didn't see a 5.1% gain coming in the Dow, but whoever does, it's historic. You've never seen that. The point is, why stand in front of that? Now the question is, after they do whatever they're going to do, what's their second act? Because monetary policy cannot control this virus. Science is going to control the virus. Mother Nature is going to control it. How it gets its impact works through these, that's what we write about. And there are times when I tell my traders, my paid subscribers, stay in cash. And I've done that pretty often for the past 5-6 business days. Why not? What are you going to do? Stand in front of this train? You can't manage the risk is the problem. And even if you think option strategies work, they're making you either pay so much premium that you get a move and it's not paying off because nobody wants the other side of the trade. Then you'll say, well, I'll write it, and then you get a day like today in the premium, and then you get hurt that way. Again, I got the gray beard, I've got the gray hair, I've been through the crashes in the 80s, the 90s, the Great Recession. And you just simply sit back at some point and you go, this is for somebody else for a few business days. Futures get themselves back to normal. They're not normal yet. Let's get through the G7 tomorrow, which is first thing in the morning, and then we'll see what to do. In the meantime, if you'd like to get our market information and pockets of my wisdom, go to www.iraepstein.com, our free trial. Sign up for it there. The word is free trials. You can click up here to do it, and you'll see our other offerings as well. I'm Ira. You have a good day.